Alrighty, we're up and running. Right, so a few questions. Thank you for those who sent in some bits and pieces of order flow things that they wanted to have a look at. Just to finish off doing bits on election or to add a little bit more. This is the Treasuries or T-note on the 2016 and the 2020 election. 2016 was the buy it on Trump, risk off, sell it afterwards. So effectively the inverse of the equities. Quite interesting the 2020, where we essentially just rallied straight off and stayed up. You compare that to say what the 5 minute on the S&P did, and this was all over the place. It was up, it was down, and it was marginally up by the end of it. The Treasury just went for it straight off. What that does lead me towards thinking is I'm not entirely sure that the Treasuries are that straightforward as much as everyone thinks they are. I'm perhaps leaning more towards the S&P at the moment. But we'll move on from the election. I've actually done a bit of a breakdown of it. I'll show you very briefly. This will then get sent out at some point later on. But, ooh, that's not a positive sound. Anyway, election preview. I'll send this out at some point later with some views on what the key states are, when I think they're going to come out, generalised view on which markets in which direction, etc., etc. I'll send that later for those of you who do desperately want to trade this. And there you go. Discovered that Polymarket seems to be a pretty good thing to track. So if you're looking at anything on the night to watch, the two main things that people are going to be watching is betting markets, Polymarket or Betfair. Appreciate that if you're not in the UK, Betfair may not be the case. I just spoke to Eric, who's in France, and they can't get Betfair up. So Polymarket is probably the main one. I believe Polymarket's a crypto thing as well. I'm not sure, but it is. Incidentally, so far, the volume bet on the Trump-Harris election or presidential winner on Polymarket this morning was 3.2 billion was bet on it so far, just on that market. So there's a lot of money going on it. Generally, the betting markets are correct. The other thing to watch is I think I mentioned this yesterday, the New York Times needle. That's the one. Needle. They've got on the New York Times website, they brought it in 2016, and it's basically a needle that shows the likely swing from one candidate to the other. 2016, they only did it based on the few swing states. They've now done it to actually do it across the whole thing, and it effectively takes on the information from each county when it reports and then extrapolates that out. So similar counties they would assume would have the same results, and so they can then get the needle to move one or the other. If nothing else, it's visual and it's straightforward. So anybody can look at that and go, oh, Trump's going to win, Harris is going to win. Oh, yeah, you need something that's straightforward if you're going to take some trades on it. The fact that it's straightforward means a lot of people will watch it, which will therefore mean the market will become quite reactive to it. So that'd be the way that I'd be looking at it. Polymarket or New York Times needle. Right, we're gonna have a look at a couple of examples that have been sent in. One thing, I can't remember who sent this one in. I feel like it's Jason. Yes, there you go. Question from Jason. If you can put the prices on the chart, that'd be wonderful. It just makes life a little bit easier to know where you are. So that, because I went and tried to find this on a footprint, and fair enough, the timings were pretty bang on. But when I went and looked for it, you're trying to look for the same pattern and hoping that the time's correct. If you put the prices on, it just makes life a lot easier. Rant over. Right. So we're going to have a look at the difference in order flow between low A and low B, and between low B and price action C, the absorption. So we may well skip forward to that bit. This, to me, just looking at the chart, looks more like a market that essentially is just going sideways. And so it's almost more a case of you just getting this churning rotation rather than there being sort of any obvious absorption. But further context, the lows are relatively quick turnaround, so wondering how easy it is to spot the failure of A to continue, whereas B continued its reversal. So I think that's a question on how do you know that A is going to do that versus B do that? Simple answer to that, you don't. The only moment that you could say B is now going up is probably when you break that high. A is harder because there isn't really a high to break. So until I'd say if you're buying it down here somewhere, until you're up here, it's not a reversal, it's a bounce. There's always the question of, when is it a reversal versus a pullback? To me, the only point that something becomes a reversal is when it takes out a previous resistance point. Once it's done that, it's a reversal. Until that point, it could be either one because it's not broken the trend. If you do it like that, it could do that and keep on going. Once it breaks the pullback here, then yeah, I think you can say, yeah, we're on. It's going to the upside. So that's answered that one. With regards to point C, it was 10-minute range of only about 5 points, but the break below was quite quick and worth 13. Was there enough information in the order flow to make this a viable trade or only useful for exiting longs from the low? This is, I may not go and replay that because it's going to be 10 minutes of watching it do not much. This is an example. We talked about this with, I think we were talking about oil yesterday, and it got itself into this kind of range. I think it was from 20s to 10. And it trades up and down and up and down and up and down the range. You can take a trade on. I don't think you get any information within the range as to which way it's going to go. What you've got to do there is look at the way it trades at the extremes of the range. If it changes when it gets to one of the extremes, assume the break is coming. That's the simple way to try and approach it. From the middle of the range, I don't think you're going to gain anything. If you have a particular view, let's say you've concluded that the low is done, this is the beginning of a continued move higher, I think you're fine to say, well, I'm just going to buy the bottom of the range, perhaps use these highs. You buy the bottom of the range and you put your stop outside of the range. Ultimately, that's what a lot of people in the range are doing. It's a 50-50 trade. You're leaning on the idea that, well, this could well be the beginning of a reversal or the continuation of a move higher, sorry. It's a reasonably straightforward stop. If you're right, you're going to be on side, whatever it was, 5 ticks or so before you even get the direction come in. So you're in a nice place and you can add on the break of the top of the range. So there's nothing wrong with getting in within the range, but it's more a case that you're trusting the technicals and going, well, it's a 50-50 outcome, but I think I've got a bit more of a directional bias one way and I'm going to play for it. If you don't want to do that, then you just simply go, here's the range, change at either side and go with it. Runs the risk if you do that it changes a little bit. You go, this is it, sell, and it just goes tick, tick, and back. So it depends how you want to try and approach those things. Right. Let's go and have a little look. So what I've done, I put the footprint up. I'm not going to replay it with the footprint and look more at the order flow if there's anything there. I have not watched these either. So I don't know what's going to happen precisely in terms of the way it trades. I will try and give a view as to whether I think there's anything to do. Obviously, it's quite easy to go, well, I know it's going up, so buy it. That's dead easy. What I'm going to try and look at is, well, is there any reason that you want to buy it just from an order flow perspective? If you've got a level there, and I can't remember if there's, yeah, there is a level at 27, 28 area, that gives you a little bit more bias towards wanting to buy it. It's not quite hit the level, so that would be the bit that would put me off. Yeah, if I'm going to try and buy it, I want to buy at the level, not 3 ticks above it. Because if you're going to buy 3 ticks above it, why not 5? Why not 10? How far above a level are you going to do it until you go, well, I'm just buying anyway? So the first thing would be, if it's going down there, personally as well, I would not want to buy that. I thought those lows were really bad down at 25. I would want to be short. I would probably just look at the footprint there and we'll see how it trades. But looking at the footprint, this little step down of selling, I would probably be short there trying to play for the break, because this was the break of the previous day's low, or the previous day low was up here. This would be the point. I think this is it. We're going to do it. Which obviously goes wrong, and that's something you have to accept. If you're going to be a breakout trader, one of the things you have to accept that is often you go, this is it, and it's not, and it sits there and doesn't do anything. But if you get that wrong and you get stopped out here, you're losing a handle. If you get it right and it goes through 25, you're 7 handles on side before you then get the big move, which you're hoping is about 50. So they're very good risk reward trades, but with low probability of working. Right, is there anything in this? There's your bit of pace. So that's the bit that me, I'd be thinking, yeah, that looks like a sell. Use that little bit of pace, try and sell, use that lack of volume there as a reason to sell. So at this point in time, it's ticking down. It's very steadily ticking down there. You know, it pushed down, it had a surge down, it's holding towards the lows. There's not a great deal here that's making me think this is a huge buy. You've got a bit of volume done down there. There seemed to be a little bit of kind of, you could almost argue absorption down there. But through a ladder perspective, I'm thinking this is probably similar to the other one that you talked about in that range. The markets are going to do this. They move, then they form a range, and then we move on from there. My bias in this scenario would be very much down. So
also in this, we failed the IB high, right? So we tried to take out the IB high, we failed, and therefore the odds of, if we get to midpoint, the odds of taking the outside the other side are on for trade.
Exactly. And then you've got the attraction of those levels below to break. So, and this is something that you always have to kind of remember, that whilst yes, this went up and you can look for reasons for it to go up, and you could definitely find one, there's an element of you've got to look at this and go, well, what do I want to do here? So if you want to be short, this is perfect. It's come back, it's absorbed at 30.5. That had only done about 200 the first time. So it's just absorbed another 300. People definitely want to sell that. So if you want to be short, this is very straightforward. You sell 30.5, you put your stop there. If you want to be long, I don't think there was enough down there to justify being long. The bit that does get me thinking you can be buying this is up here. And this is what I would call a high-low volume reversal, where you've done lots of volume down here, and then the area that it went down with very little volume, which was there, it's just gone straight the way back through it. So the point where the sellers effectively took control and pushed it down, you would assume they should defend that. And they did, at least for a period at 30.5, and then very quickly when they got tested again, they gave it up. So it's almost a case that people went, yep, let's go for it. A few of them got it down there, and then nobody came with them. They didn't have the firepower to hold it, and back up it's gone. That's essentially the way it looks there. It does mean, yeah, obviously I know this is going up. It's a really difficult trade to have cut and reversed that unless you're extremely fluid in the way you execute. But if you're convicted towards the downside on this, you fancy this to go and break the big levels, I think it's a really difficult one to then flip that and go long. You're always going to be worried that you've got a nice position, you flip it long, it goes tick and then goes back, and then what do you flip back short and basically just take a loss of 2 ticks and a loss of 2 ticks back, and then if it doesn't go, you're really screwed. The downside of that I think is worse than the upside of any money you might make on a trade like that. So in this instance, I'd be looking at that thinking, I've lost on a short, it's not worked. If you wanted the long, I think you could do it. If you didn't bother getting involved in the short here because you fancied buying this, then I think it was a viable trade, that once it skips over here, you could buy that towards the top of there, put your stop down at 30 and go, yeah, well, if it doesn't fall it back into that volume, are you basically down here, then it's all good to go up. And then it's just a case of where it goes up to. That's perhaps the harder part on this one. And this comes down to a question then, which is why you've got to kind of decide what you are. If you're a scalper, you've got the bounce back into where there was volume previously, that's good enough. Whack yourself an offer up here somewhere and you can get out because that's where all the volume was previously. Job done. You've taken yourself 3 or 4 ticks. You could then look to probably have a go at selling it up here where the volume tails off again and try and play it back down and try and play it in multiple different ranges. Doing that requires an acceptance that you're going to get a few of them wrong whilst you work out what works, i.e., is it holding here, is it holding there? And then you'll get a streak of winners. If you think you've got the low, you've got to look at this from that perspective. Your stop is still down at 30, and until this goes up through this previous area of light volume, until you're up into the mid or high 30s, low 40s, I don't think you can move your stop. So you've got to have a plan as to what your objective on the trade is when you get into the trade. Why are you buying it? Why are you selling it? There we go. All right, get out of that one. Okay, the next one was, let me just flip this back. 510, okay, I'll flip that one forward then. So that was then this one down here, which is very similar in terms of the way it drops there. So through the 28.5, which was the previous low. So I'll stop that one. And we'll go to 07.
Also that level, 24, was pretty big daily long-term level. Yes, right. And we tested it last week, on Thursday when we dropped down. I think we tested it, and we tested it in the overnight session one day this week. It was a pretty solid. Yeah.
So all those lows, yeah. That's exactly the reason I wouldn't want to be long down there, because I don't think these are lows that should hold. I think they'll break it tonight.
I think I'll break it tonight,
Yeah, it's just too close not to do it, in my view. But that would be the reason that I wouldn't want to be short, wouldn't want to be long down there. If it does break, it's not going to be a tick 23 and bounce. Surely it's going to do 24.10, not instantly. It might tonight, but I don't envisage it doing it as just a little tick through and bounce. It's going to go. So I wouldn't want to be long. I wouldn't want to be long down there, which is what sort of sways the idea of the trade. Once you've seen it do it, this one might be different in the sense that, well, if you've seen that or seen the way it did it last time, you might be able to look at it this time and go, okay, we're right to go for it. Interesting, it's come back through here still with reasonably little volume, so you could have another go at that, which realistically is probably more likely what I'd be doing in this situation.
Trying to set it for a break.
Trying to have another go. Yeah, it's the same game again, but it did the light volume and it went light volume down, trade here, light volume up, trade here, and then it's gone light volume back down again. Yeah. So I'd look at that and think, well, it doesn't like this zone. So if it's below it, you play it down. If it's above it, you play it up. So being as my view is, I think it's going to break those lows, I'd be looking to then use that as another chance to go short. It's essentially the exact same trade from previous. It looked more sluggish than the first time. The first time it went down with a bit more of a kind of drive and then rotate. This has just got back down into that same area and just got very kind of stuck, which is not exactly what you'd want to be seeing.
Where you've highlighted on the footprint, those 4 white boxes, is that meaning that there were no one was buying at those prices as we moved down through those?
Yeah, basically they've just gone bang, bang, bang through the bids. You'll probably see that in a moment. So that's 27 down. So despite the fact you've got all of these orders here, when it went down there, it didn't trade them. There you go, that's it. Yeah. So yeah, you can see it there, 69, 69, nothing. That would be what gets you feeling really confident now. This is it, it's gonna go, it's done what it did before, it's down, absolute zero trade. You'd be thinking this is it. I wouldn't be surprised, I didn't see the risk on it, but I'd be quite surprised if a fair few people didn't pile in there for the short, for the break. But yeah, it's done the same thing. It's done the drop. It starts to build volume up, which is all good. You'd be fine with that. I'd like to see it kind of go for it. Yeah, it's at the level. You kind of feel this really should go for it here, particularly there it gets to the low. Again, this is one of those. If you're short, it's very hard to get out. If you go, ooh, I don't like it, and get out here, and then it goes whoosh tens, you're going to be really, really frustrated. So you have to accept it didn't look wonderful, but it didn't look bad. Back to 27, it's the same as it did last time, absorbs 26 3/4. It's the exact same type of order flow. So there's a willingness to try and sell it. If you've just seen what happened last time, you'd probably be a little bit more nervous about the sweep up back through here. So this starts trading 28.5. I'd be a little bit more nervous about staying in that, just on the basis it looks very similar to previous. But you have to, in my view, from here, stick with it. I mean, if you don't, and this goes, you're really missing out. You can't talk yourself out of it at this point. You know, you're on the edge of the move. As a long, the argument for the long here, you could look at that and go, well, it's on the level. You've seen it struggle. It's slowed down. It's kind of sapped the energy out of it at the point where it should be picking up some pace. It's what I call a cheap long. You can buy 25 and put your stop at 23.5. I wouldn't be confident it's going to work. But if it does work, you've got the low for a tiny stop. You can look at it like that. That it's a very cheap trade to take on.
Is there anything in the footprint that gives you any kind of indication of changing the balance of your focus? It doesn't look like there's
I don't think there is. Like, you look at that, the cumulative delta on that range is 22. Yeah, for a lot of volume as well. That's about as balanced as you can possibly get. So that is the prime example of, well, pick whichever you want and one of them will be right. Yeah. But there's nothing that really says that there is.
There's nothing in the preceding footprint pattern in the preceding bars that leads you to think, well, actually this move is getting close to done, right? There's nothing that says.
I don't think so. No, like this one moves down quite quickly. It's 269 negative, but you kind of expect it to be that. So again, I wouldn't read too much into that. Yeah, if anything, that's quite a negative sign because this is the volume. Yeah. That's the lightest volume in these. but with one of the biggest changes in Delta. So of all of that low amount of volume, there's a distinct lean of more selling in it. That's pretty bearish, but unless that's followed up by anything, it really doesn't mean anything.
I suppose the only change is that only difference is there's a significant change in the bid volume, right? Because it goes from 3.7 in the green, I think 3.72, 15.35, 8.58. The third column, what's the third column down?
This one here.
Down, yeah, what's that?
That's the buy at. That's buy into the offer versus sell into the bid. So yeah, that number there is the difference between these two. So you've got a lot of volume done here. There's 3962 bought into the offer and 3940 sold into the bid, which is just this two-directional trade, which is building all this volume up.
I suppose the only clue, would you say the fact that prior to those bars, you've had 372, 1535, 858 bought into the offer, so not a huge amount of buying conviction into the offer on the way down, and then suddenly there's a big jump up of somebody or several people have lifted the offer in those prices at a rate at least twice, if not up to 4 times the size of the previous bars, which is not really.
You can say that just sellers have done.
Yeah, I was going to say sellers haven't exactly done much different to that. So yeah, I would more just read it as this completely balanced there, as in they.
That's why you said footprint's not the holy grail.
Yeah, I think so. Yeah, because I think you can interpret. If you want to be long here, you can find a reason to be long. You can go, well, look, that's positive, positive, positive. It's a buy. But for me, I'm more interested in the change points. So this bit here was where it seemed to have quite a distinct change, not just in terms of there being a decent change in delta, but there was actually that was coupled with movement. Yeah. Here, you've got, yes, it's positive, but there's no movement that backs it up. So effectively, it's just doing a lot of work in a small area and nothing really changes. Until that translates into direction, all you've got is some people buying, some people selling, and marginally more buyers. But for a volume of, I don't know, 8, 10 and a bit, you're probably pushing 12,000 contracts. To be influenced by the fact that over 12,000 contracts, there's about 300 more buyers than sellers in there out of 12,000. It's a pretty limited amount of, you're being swayed by the minority. Yeah. Whereas this one, you're not so much. That's quite a distinct amount there. It's what, a sixth of all the volume is into the sell side. 12,000 by 3 is 1/36. It's quite a distinctly big difference. So I'm more interested in where you sort of get these changes in the way it does it. This bit here where it had that rush down, it's tried it once, which I think is probably it doing it here. Tries it once. Once it gets above that, and this is something I think you see on the ladder as much as you see anywhere else. It might, it's just here now. What you're seeing is the rotations have started to change. So rather than it being 24.5 to 28 to 24, it's now 28.5 to 26. So it's unable to get that push back down. So effectively the low is getting inched up here. So what's happening is people are effectively then moving their bids up. Again, if you want the long, that's great. I don't think it should really change your view on the short, although once you're getting up through and back above what was the previous low here, back through where they drove it down previously, you're starting to lose the reason to believe this is going down. And it also looks not dissimilar to previous. So for me, this would effectively end up being 2 losers. Probably not massive, but I would suggest 2 losers there. You try it once, you try it again. The second one was probably the one that you're more likely to lose more on. The opportunity to jump in more down at 25.5, I think was definitely there. Once it got there and it's stuck, you go, yeah, that's it, go for it. And it doesn't go. As for a buy, I don't think there's anything in this that suggests this is the one or any reason to believe this has to go up. This is more a case of you sort of take it in stages. What you've effectively done is gone down 28.5 to 31, 28.5 to 36, down 31, 28.5, 24, 26, 28, 31. If you don't worry about all the levels in between, that's roughly the kind of pattern of movement. Once you're back up above this sort of 28.5 to 31 area, you're really struggling to find reasons to want to sell this. If you're looking to be able to say that's the reason to then go up, maybe you've got something. But with any of these types of trades, if you're trying to buy this, you've got to have, again, where are you really going to try and take this to? Otherwise, you end up long, let's say down here, 27.5. At what point are you going to give this up on that move back up? Are you going to go for the high of that first bounce, which was here, which was 36, or are you going to wait for the break? If you're going to wait for the break, that's absolutely fine. Nothing wrong with that. But if you're long 27.5 playing for the break up here, there's nothing that should get you out either before the break or below the low. That's a mistake people make. If your play is, I'm just playing the bounce back into this range up here, and you give it up where the volume is at 34.5, absolutely fine, decent trade. The worst trades are where you give it up at 34.5, but your intention was you think you've got the low, because you're never going to get a better place to be in the trade than where you are, and you've given it up for 7 ticks. If you think you've got the low, the implication of that is you think there's probably 30 plus ticks in this. Don't give it up for 7. If you think you're scalping it off the low back to 34, perfectly good trade. That's the bit that is most frustrating, I find, with people. Oh yeah, I think this is the low. This is where you want to be short. They get short and then they're giving it up 20 ticks away. Oh, sorry, not 20 ticks away, 5 ticks away.
And I was going to say, which is one thing I think also I certainly noticed with order flow is that when you talk about coming down to the bottom and getting short, and you're saying like you don't want to go back up above that first line, you can kind of know with the experience of watching enough order flow whether it's going to go or not, right? Because it doesn't go, and it starts to look like it's going to start to drift up, and you start to get that sense, which is not going to do it, is it? And then it like spikes up above that, and you just think, and there's a period where you're uncertain, like my mind can't decide, is it going to turn around and go back down? But really in my heart, I know the probability now is that it's going to go down, is edging smaller and smaller and smaller until it finally ticks up, and then you get start to get out of the trade.
Yeah.
With experience, you start to know personality of the tape of your market to know will it go here? What is it looking like it's going to go, or is it just looking like it's going to not?
Yeah, and the hardest bit about those types of trades are the ones a bit like this one and this one, where when it's down here, even though it runs out of energy and it feels like it just saps all the energy out of it, you can't give it up, even though you don't know, but you're looking at thinking, this is probably not right. But the downside of giving it up is far worse than the upside.
Because you're going to go into the market 2 seconds later.
Yeah, exactly. I think that's where if you sold it here and it doesn't go straight for the low, I think it's reasonable to say, fine, I'll scratch that, I'll give it up, because you basically chased it and punted it, it's going to break the low. If you've sold it up here somewhere, or that 30.5 area again, then I think you have to kind of go, well, look, it might not work, but it's far worse to give that up for a 4-tick winner and watch it go 20 than it is to see it bounce back up here. Particularly if you've got a good entry in this way, try so hard. If ever you've got lows like that, those sort of bad lows, if you can be in 5-10 ticks above the low, whatever it does at that low, you're probably not going to lose. If it fails to break it, fine. Yeah, once this comes back up here, you end up giving it up. If it goes through it and rips back, then you're giving it up here once it's done that. Whichever way you do it, you still end up with a winner. Yeah, it's perhaps a slightly disappointing winner. It's not the 30, 40 handles you were looking for, but you put yourself in a position where it's quite hard to lose. If you go and just try and sell it at the low, you are very much basing this on your ability to read the order flow absolutely spot on. You know, get your timing perfect. If you do, wonderful. But also, if you sell it higher up, the other advantage of that is you can afford to go and have a shot at the low. The kind of, go on then, sell it through the low. If it works, wonderful. And you've added on to the trade. If it doesn't, yes, you move your average price down, but you still probably don't get caught out on it. And that's how I'd look at those ones. So I hope that answered that one for Jason. Right. Okay. Okay, so this is one in the bund. Quite a common formation. It is common in the bund at the moment. A consolidation at the end of an impulsive move that breaks but doesn't continue further and reverses. This is a kind of variation on what I'd call a block reversal trade, where I always see that as the clue. This low, so you sort of think about it as a kind of flag. It attempts to go and then it holds back above. That's the moment. And it's a bit like that last one, and this I think is something important with any reversals. The point where you think this should go, this is the chance to go. If it doesn't take it, I just think that's quite telling, which I'd say this one is. So you've got that low there at 30, and the pullback there at 36. There's a couple of different ways to try and play this, but that for me is the big clue. When it does that, you think, yeah, this isn't right now. And you've got the chance then to try and reverse this one. I'll try and play it. I might speed it up, certainly for some of this, because yeah, that's half an hour to get to there. It's quite a common thing in the Bund. It does it a lot when you move into quieter periods. It does a lot of this kind of drop. It feels like it's going to go, and it just doesn't. You know, we saw it earlier for those of us in here. We were looking at it, and the Bund did exactly that. It drops, it ticks through the low, it sits there, and then it just goes and just runs straight the way back up. It's a really common thing. You see it a lot. Any market when it gets to the low, the point it should go, and it just runs out of energy. That's the point that you can play the move back up. It's a trade that like you're taking on not so much because you've seen something, you're taking it on based on the absence of anything. Yeah, there are no buyers there, or sorry, there are no sellers. So the fact that there are no sellers is enough to then go, well, I can have a go at buying this. I think. What's this? So I need to check. What I didn't do, I replaced the chart because there was no prices on it, and I've now forgotten which day it was. Okay, so I think that's the 4th. Okay. There we go. So that's trading up at 50. Right, so that's on triple speed now, just to hopefully give it a little bit of a boost. So it's currently trading 50. There you go, so starting to sort of tick down a little bit. So it took about 30 minutes to form. Given the amount of time spent forming it and with some previous support, it would be reasonable to suspect that this might be the end of the move down. What would you be looking for on the order flow for an entry on the upside? Okay, so with a trade like this, something that I am looking for, once you've got that and that kind of ping back, particularly as the delta jumps on it as well, like I said, this would be something where it's less of something I'm looking for and more that I'm just not looking for any more selling. So at this point, I'm starting to get worried that this is not the right time for it. Might be. I wonder if that's today. Look at this. No, it is right. Okay, it's on triple speed, so it'll get there in just a moment. If you're looking for this to be the low, you've got a couple of things. Any kind of spikes in volume that dissipate really quickly, for me, is always a bad sign of a continuation to the downside. So you've got that there. You get this attempt to go down, which then fails. Get another attempt to go down, jump in volume, and again, it drops off quite quickly. And you actually get just as much volume on the counter move as you do on the initial move down. So with that in mind, I think that helps sort of support the idea of the trade here. I'm hoping this gets on with it a little bit. I'll ping this on, I'll speed it up a little bit more. One thing on replays as well, it's actually often a lot easier if you increase the speed. Sounds like a bad idea, but what you start doing when you increase speed is, rather than looking at every trade and the sort of slow and steady back and forth, you start to see the sort of ranges of movement. This is doing a lot of volume down here. I'm just wondering, what was yesterday? Tuesday? Monday? It's not an auction. But what you've got is a lot of volume done down there. So that's the down to 30, and then it starts to bounce back up. So one of the things that I'm always interested in as well from an order flow perspective, you're watching what's going on. Try and sort of keep a mental track of where it's traded. So what we've seen it do basically so far is go from 50 to 37. Then it's sort of gone sideways, 30 back to 37. So I'm not worried about all of the in-between and the every tick here and there. What I'm trying to do is define areas that I need to have a bit of interest in. It's 30 or well, 36. You can see the absorption there. At 36, very, very similar to that S&P one as well. But you're basically seeing that we're just sitting and getting trapped in a range here, essentially. It's got, I'm going to check my times because this is not the time that it normally happens, but it's got a feel of an auction about it. The way that it's done this bit of direction, then loads and loads and loads of volume churn here. So it does feel like a bond auction, but it doesn't look, it's the timing's wrong for it to be a bond auction unless the Germans have changed their times. Bearing in mind this is quadruple speed, so it's still not exactly thrilling. So you've gone down, it goes down. Again, if you're looking for the buy, unless this is your level, I don't really see that there's much to be done there. But that is the chance to go. You've just had the back to 37, you're on the way down. This then really shouldn't be coming back above 30 if this is going to go down. So just by keeping that kind of mental track of the key points rather than worrying about what precisely did it do at 29 and 28, you see that really pinning it down, all that volume done at 28. This looks good to go. You know, it's doing the volume on the way down, it's putting the work in, and then it comes back above 30. And this is then the point where it dies. So you've just seen that move down and then the bounce back. And as soon as that's then happened, you get this bit, which is a kind of just 10 minutes of sideways. This is where, if you're going to play the what I call block reversal move, one approach is to just buy it at the bottom of the range and just go, right, I don't like this anymore. I want to go long bottom of the range. So you can buy 30, 31. Once it starts to establish this little sort of up down range, which is basically 33 to 30, you could buy that. Again, it's a reasonably cheap stop, 24, and you're playing for this to move up. What you're expecting, not overly fussed as to what it does here, basically, as long as it doesn't go down. And unless you start seeing people just hammer it through 30, holds an offer at 30, then I wouldn't be too worried. What I'm looking for and what I want to see on this is that as it starts to come up, it picks up some pace through here, in particular through that 36, 37 area. That's the point that you need it to do. So it's done this and it's now doing this. So that's 26. So your kind of reference line is 37. What I want to see is when it goes through 37, I want to see it do that quick. If it does it quick, what that's showing you is it's forcing these people out. At that point, you think, yeah, we've got them now. I'm good on this. And you can then sit there and let it reverse. Particularly as you're moving back into this range here, you can then look for it to move back towards the top of the range. So that'd be how I try and play it. It's very much one that you're playing on the basis of, well, it's just not going down. So you can play it up. The idea of it's not going down, therefore it must go up, has to be partly influenced by the idea that you've got a level and you want to be long. If you don't, then to me, this is just a block sideways trade. I would buy the top of the break or buy 37s as long as it picks up some pace. And then I would try and buy any pullback to 37. So any kind of drop back that basically trades like it does here, I would see that as a decent buy and try and play that like that. So that's how I'd do that one. So this, and one of the things you have to do is you have to kind of have, and hopefully by looking at these three, what you've seen is three similar but not exact replica reversal type moves. You've got to always have this kind of idea of what you want to see. Yeah, if it starts to trade in a certain way, brilliant, that's where you want to get in. You know, here what you saw is it went back to 37 and it quite comfortably traded the 37, bid 37, trade 38, bid 38. There wasn't much back and forth there. That's exactly the kind of stuff you want to see there. You just push, push, push. That gives you the clue to go, yeah, this is fine, I'm good enough. So a lot of it's about having a kind of like preemptive expectation of what should happen. If it starts to do it, that's enough. And often it's not a case of it's got to do whatever it's doing perfectly. It's just the case that almost as long as it doesn't do this and as long as it doesn't do this and it looks slightly like this, that's good enough. You can go for it. It doesn't have to be perfect. If you look for perfection on it, you'll never get it. And if you look for it to work exactly like another time, equally you won't get it, but you get these situations that are roughly the same. That one just dropped and died and back up. The other two actually did reasonably similar type things. And then again, it's where you want to try and play this back. Like I said, for me, that would be back towards 50. Up there, right. Okay. I had a sort of quick look at this. I wasn't quite sure what we're trying to sort of answer on this one. Go the S&P on the break of 49. Incidentally, excuse me, I think you've got your timings a bit off on this one because that's quarter two. So unless you're going to try and play it from here. So absorption, formation of a range over here. Before the breakdown, there was a brief snapback which spooked me out of my short. Okay, so I imagine it was short and then out. And then how price reacted after dipping back under. Arrowed at 49, the appearance of volume profile. Okay, we might well come on to this. With the snap moves like that, what you've got to think, or what you've got to kind of focus on is once you've got the snap down, don't talk yourself out of it until it gets back above the level. This is the key to playing a breakout. If you're in on the break, as long as you're on side, it's all good. And with any kind of snap, you're always going to get some degree of pullback. Don't let that spook you out, because anybody who's trying to play the break and missed it is going to want to sell into that snapback. Yeah, they're looking at that as the chance to get in, for one. Also, anybody who was thinking to buy it above 49.5, until it gets back above there, they've got to be pretty nervous about that, and they're not going to want to be long below the level unless they've got some kind of really clear reason to, or they're going to be buying it for multiple prices going down. So that'd be the thing that I'd try and point out there. I'll see if I can flick it up for you real quick. Okay. Right, let's... Okay. So there you go, that's at 49.5. Just there, so yeah, it does it, I get a bit of absorption. There you go, there's your snap. So if you've got in on the snap, that to me is pretty reasonable, quite happy with that. You're in on the snap down, that's all good. Yeah, trades back 49.5. Just think of it from the point of view of somebody who wants to sell 49.5 is pretty happy now, it's come back to them. Personally, looking at that, I'm not convinced there's that much in it. I can't remember what 49.5 is, but I don't think that was really anywhere, if I'm completely honest. But once it's done, yeah, it's done that little snap down. This again, the reason that you're getting out has got, you know, one of the things that I would want to know on that is, well, where's your target? Because if you were looking for this to just go snap next level, then fair enough, maybe it's not worked. If your target's much, much bigger, I'll bring in the S&P at the time. This is the move. So you're basically playing the break of this little low here, which, yeah, I imagine there probably was a fair bit of absorption there. You're playing that, you've got to at least go 47. And I'm assuming there was probably looking for a little bit more in this. If you're looking for 47, you're just playing the quick snap, then there's nothing wrong with that. Give it up. If you're playing for more, then you need to be clear on what more you're playing for. You know, probably there would be the obvious target on that. If you're playing the break of 49.5, then there's two ways to look at this. Either you get below 47, and as long as it doesn't rotate back up, you're fine and you stay in. Or you keep your stop back above 50 and you go, well, I've done the work now, I've got myself in. I think this is going 38, I'm staying in with it. Personally, looking at that, you're trading right around where there's a lot of volume been done already on the day. I'm not super keen on that as much of a trade. I think it's one where you're kind of finding something. If you do a lot of these types of things, then I don't think there's too much problem in it. But if this is like a one-off and, you know, you've maybe done only 2 other trades in the day, I think this is a pretty weak trade. If, you know, you've had a go at this, you've had a go at, I don't know, the pullback and breaking the high of this move here, you've had a go at various other different things along the way, I think that's fine. But if this is sort of a one-off trade, I think you're getting sucked into the short time frame too much. For a moment, I couldn't even find it. You're getting sucked into what's going on there a little bit too much. So main question tomorrow there, Kiri, is what exactly is your target on any future trade? Because that massively impacts whether you should or shouldn't get out. If you look at that 47, you could give that one up there. Right. Okay. Last question here, I'll try and answer for you. Question about IBs. Do you know statistically how likely it is that the IB will form neither the high nor the low of a given day? So the implication there is the market breaks the IB high and low on a day. I'm assuming when you say the market, most people usually mean S&P by that. So if you are talking S&P, there's the stat to break both sides of the IB. It does it 30% of the time. These stats are compiled based on the previous year of 250 days, and then the previous 6 years of 1,500 days. Just one, it's not a caveat, but one thing to know, these were compiled in 2016. So that is taking you over the last year there, done in January 2016. So this is throughout 2015 and then throughout the previous 6 years as well. So going back to 2009. So some of these I can share a whole sheet here, which has got S&P, DAX, Bund and Euro stocks on it. Bear in mind, some of the stats are going to be completely useless. For example, the modal average initial balance is 5.25 ticks. You try and find an IB of 5.25 ticks in the S&P at the moment, and I would be amazed if you find one, even on a holiday. I don't think you'll find that. And that was average. You're then looking at a large IB of 19 at the time. So a lot of this is reasonably pointless. Yeah, your ATR of 13 ticks. Yeah, again, the S&P's done what? An IB of 40 handles already today. So I think that tells you everything you need to know. You could argue that it's trying to price in a Trump win. Yeah, they're having a punt here.
Yeah, well, that's 3%.
You could finesse those stats though by saying, right, well let's take all those stats across the year and then let's take out everything that was a trend up or trend down, right? Because that's going to obviously have broken it, right? And then as you go through the day, you can say, right, are we setting up for a trend day? No. Then the IB stat is now potentially more relevant, right? And then that reduces the sample size to maybe give you slightly more
skew.
More specific down to the context of the day of the market to know whether that's useful as that to lean on. Because otherwise, if you've got all variation in what's happening, it would be a good stat to say, hey, 50% of the time, 80% of the time. Right?
That's exactly why I always lean on with stats, that they can tell you a lot of things. For example, 98% of the time it will break the initial balance. That doesn't mean there's a trade, because it could do it by a quarter of a tick and it's done it. There's another one. I can't remember where it is. But basically, there's one about closing gaps. If you open inside of range, and does it close the gap? And this happens very, very frequently. That's all well and good. But a lot of the time, that's going to happen because you close here and you open here, or half a tick above, and it goes tick and it's done it. The ones that you want to trade are the ones that have got some distance, and they actually fall more into the number that don't actually close the gap. So yeah, it's a nice stat, but leans you in the wrong direction. I think the stat on breaking both sides of the initial balance is quite useful, in the sense that what you could say is that when you break the initial balance, it's quite reasonable to assume you have probably found the high or the low of the day, i.e. the other side. It doesn't necessarily create a trade. Let's say the S&P goes and breaks the initial balance high here. The implied trade there is buy the break of the high and put your stop below the low. But that's a 45 handle stop, and also on a day that has already done a large initial balance, therefore probably won't do too much more. So you're risking 45 handles probably for not much more than another 15. Doesn't make a great deal of sense. Where it helps you out is the ones that have quite a small initial balance and it pops out of it. They're the ones that you could go, yeah, this could be on. Take that as a trade. Are there particular factors that would increase the probability? No, I don't think so. I don't think you... What I wouldn't be doing is trying to massively impact the probability. One of the factors that would affect it, if you open the classic double distribution profile, if you open here, I would have a reasonable expectation that you will break the IB both ways. So actually, sorry, for a probability, I don't think there's anything that would enhance the probability, but I think there's days where you could say, I think there's more likelihood of this happening. That would be one of them, where you get an initial balance that say that there, and it will break both sides. The other is a post-trend day move. So you get the big trending move down. These are the ones where you open IB, it tries to go up, fails, tries to go down, fails, and it does that for the rest of the day. So there are days, it's basically a day where you think a neutral day is more likely are the days that you can look for an IB break of both sides. So you're basically trying to work out when that 30% happens, which probably leans towards opening in the middle of a double distribution day and the day after a trend day would be where I'd be leaning on those. For context, I'm thinking of how it can be applied in terms of strategy. If I can assume the IB does form the extreme with very little chance otherwise, for example, NASDAQ barely broke the IB up today. Expectation today is that it won't be a trend day, it may move, but back and forth, okay. So part of this is trying to combat these stats because you're now applying a discretionary view that it's not going to have a great deal of conviction, it's likely to be back and forth because of the election. Fair, but do bear in mind if it's not what you think it is, don't try and keep playing for what you think it isn't. If it's overwhelmingly likely the IB is the day's low, I'm thinking it could be viable to open positions in both directions. Use MNQM and MNQH and accept the possibly unideal fill prices of H, or on a larger account, you could use MNQM and NQM. Firstly, you do not want to be trading the M contract because that's June 2025. There will be absolutely no liquidity in that. That will be a really bad choice. So one there. Also, if you're playing June versus March 2025, this is really nothing to do with the IB. This is more to do with you playing the difference between the two contracts. So it's an arbitrage trade. That's the first thing. I believe though what you're trying to suggest here is to be long and take a profit on one thing and short and take a profit on the other thing. If you're doing this in the same market, you can't be long and short in the NASDAQ. If you're long MNQ and short NQ, you have no position. You can't buy something and sell something. You have done one or the other. I know that you can do this on spread bets and you can have a long position and a short position. It's still the same thing. You can't own something and sell the same thing and still own and sell it. You have done one or the other and it becomes past tense. So I don't think that's a viable trade in the slightest bit. Particularly if you start going out across contracts, the spread will be massive. You're taking who knows, even Z versus H, Darius. Go and look at NQZ, NQH. In fact, I'll show you. There you go, that's the liquidity in NQH.
Nice.
And that's the number of contracts traded per price. So there's no way you're going to get filled. The only way you're going to get filled is hitting at market. So you're paying across the spread to do so. You don't want to be playing that game. Yeah, essentially, if you're going to do that, what you're trying to do is look, and what you need to do is look at the difference between NQH and NQZ, work out the spread between the two, and then you're looking to try and play a trade whereby you get in at a better price than the spread. That's the way that you're playing it. So for example, if NQZ is trading 2300 and NQH is trading 2350, what you're trying to do is sell this at, let's say, 52, buy this at 98, therefore you've now increased your spread to 54 ticks rather than the 50 that it has been trading at, and then you've got to get back out to make 4 ticks. That's all you're doing by going long one and short the other. You're playing the difference between the two contracts. You can try it. The problem you're going to get is you won't get out of NQM, MQH, and if you try M, it will get even worse. Yeah, the total daily volume on this is probably sub 1,000 contracts. So even if you have some degree of strategy here, you're never going to be able to do this with more than one contract. So taking 4 ticks in the NASDAQ on one contract is $80 minus the round trips. and the risk, because you're going to struggle to get out.
Sorry, is that another, that's the another month's?
That's the March NASDAQ.
Can you do, so if the current market's trading at a higher price and one of the other months is trading lower, can you use that as a screen to short, not like a long-term screen, but just for your analysis, okay, eventually they should, I remember reading that somewhere.
They will converge over time, yes. But there's cost implications in doing it that essentially it won't really change anything.
Just maybe keep it in your analysis. If you want to go short one day, you can add that as confidence or something.
There's nothing. If you want to go trading like calendar spreads, you need to go into short-term rates or some commodities. Yeah, most commodities you can do calendar spreads, and then you're looking at the differences in each month and trying to play the difference. Essentially, all you're doing is you're saying, well, this month trades here and this month is trading there. So and let's say this month trades here, so there you go, you've got a line. If at some point one of these goes out of line, so now the price looks like that because this one's moved up there, it might be a fair guess that this one's too high, in which case you sell that one, buy that one and buy that one. It doesn't matter what happens, whether these two go up and the line goes back to how it was, or whether this one goes back down. Doesn't matter which way they go, they should get back that sort of curvature, at which point you can go, right, the trade's done, I can get out. And it's the same game if you're trying to play the months on any kind of contract. You're playing the difference between the months. It's definitely not something you want to do in equities, treasuries or currencies, because they only trade front month. The only things you can do it on is short-term rates and commodities. So there you go. I wouldn't say it's probably not worth it, Darius. It's 100% not worth it. There's a lot of things out there that aren't worth doing, and this one really isn't. So yeah, sorry to be too clear on that, but it's not a great idea. Right. Busy night ahead for everyone. It's quite interesting, the S&P at the moment. It does feel like they may be playing this for a Trump win. What seems to be the general kind of consensus at the moment is that if it's a Trump win, you're going to see S&P, the main markets that most people are talking about are these. Those four are the main ones. So S&P, Treasuries, Mexican peso, and Bitcoin, and to a lesser degree, HSI. The idea behind each of these is US equities, Trump is positive based on he's going to cut taxes, either personal taxes or corporation tax, or both, more to the point. Treasuries, he's negative because you're going to sell treasuries and buy equities. Also, if he reduces taxes, the tax revenue is going to go down, so they're going to find it harder to fund their debt, and he's probably going to borrow a load more money. So if Trump wins, you're expecting S&P up, Treasuries down, peso is going to get absolutely smoked. So that goes down. Essentially, Trump is seen as a dollar positive trade. So what you're then doing, this is where currencies are useful. If it's dollar positive, you could trade euro dollar, you could trade sterling, you could trade yen, you could trade any of those. You might as well trade it against something that is going to be quite negatively impacted as well. Like the euro is not really going to change a great deal, the pound even less so on who wins the election. But you've got a double whammy on the peso. If Trump wins, it's good for the dollar and it's probably not good for Mexico. So that's the place to go. Incidentally, peso is pretty well traded. It's pretty liquid, so it's very tradable. Bitcoin is generally seen as positive. I'm not really sure there's any outright statement from Trump going, yeah, Bitcoin's great. But the fact that he's got Elon Musk very much in his camp seems that there's a bit of a view there. HSI is a tariffs trade on the basis they will put tariffs on China, so that goes down. I have heard someone also talking about oil being a buy on Trump. I'm unsure on that, because the idea with Trump is that he's going to reduce regulations on drilling and a lot of the sort of environmental regulations, which would to me imply that they can increase oil production, which if anything would be an oil sell. So
Whereas it drives economic activity.
That was the other argument, that he would...
Not immediately though, it's like he's got to do the regulations first, and that's not like...
Exactly. So on the first instance, if he drives economic activity, then oil should go up on the growth story rather than the regulation story. I think once you get down to those kind of levels, you probably just don't bother. Yeah, there's so many other factors that impact oil that I don't think it's the one to go for. You want to go for stuff that is pretty binary on Trump or Harris, and then Harris is the inverse of all of those. But that seems to be the main thing. So if you are sort of watching now and for the rest of the afternoon, evening, if you start to see that type of correlation, I think it's reasonably fair to assume this is a degree of a play on a Trump win. This would get me thinking on the night, I really want Harris to win Arizona, because you've got everyone positioned one way for it.
Yeah.
Trump winning, the more and more this type of movement plays out, the less and less useful it looks, or less and less good Trump winning looks. So that would be the way I'd be looking at it. Like I said earlier, it's hard to get a conclusive Trump's won it on the night, or at least not until very, very early in the morning, probably the European Open. It's not so difficult for Harris. While she's unlikely to win Arizona, if she does, it's very unlikely Trump will win the election, and even more so Florida. Florida's probably if that comes out, Florida's often one of the first to report. If that goes Harris, I think it's game over, which is probably the perfect scenario, because you go, right, that's it, done. Harris has got it. We're all good, and we know what's happening, and you can reverse all of the Trump play if that's what happens going into this. So we shall see. I will send out that sheet as well later on in terms of the trade ideas, what people are looking at, timings as well. A lot of states didn't report until the next day, and the election wasn't called until the Friday. When I say called, like officially said it is Biden. It was called much earlier on the Trump election win, but he did win by a fair margin against Hillary. But for me, I think the main thing is to watch the competitive states, not the swing states. The swing states are likely to be so close that they're either going to run the risk of recounts, or they're going to take a long time to make sure they've counted them right. You get some of the competitive states like Virginia, Iowa, Ohio, Florida, Minnesota, Arizona. If they go one way or the other, I think that's probably an easier trade or an easier lean of direction than trying to tally up all of the swing states. Because ultimately, if let's say Florida goes Democrat, the number of votes that Florida commands is enough to eliminate possibly some of those swing states anyway. So there we have it. Right, I'll send that over though, and we'll see how it all goes tonight. Hopefully, swimmingly. It may not. Right, I'll see you lot tomorrow we're going to have a little look at what happened on the election, if there were any trades to be had on it. And then we'll also cover some central bank stuff. So that's usually one that I get some confused looks and a fair few questions. So if you do have central bank questions, get them in tomorrow afternoon and I'll cover some of those for you. See you tomorrow.
Thank you. It's all right.
Really appreciate it, Richard.
Promise. Just get off the spoofing idea.
I learnt it at Axia. I learnt it at Axia.
Yeah, thanks Richard.
They taught me spoofing course.
I taught you how to spot things. I can also spot, fraud, murders, all sorts of stuff like that. I can spot them. It doesn't mean I do them. Betting scams.
After going from trading the Bund to trading something like the ES, holy fuck. That's what I can say, holy fuck, right?
Mind blowing.
We've got a lot more money to do,
Sorry?
a lot more mistakes to make.
That's the way.
Oh,
It's a bit lively, isn't it?
it's fucking crazy, man.
What's that, S&P?
Yeah.
Mm.
I'm guessing it just moves.